Hey guys, welcome to this video. Just going to cover the Euro Yen for today off the back of last night. Now, you had many comments from the Bank of Japan that have moved this. By the way, don't forget to get my free training. It will be underneath this video. It will help you out a ton. It's entirely free. So Bank of Japan said plenty of things about ending their negative policy rate. That's something they've sustained for a very long time. Mostly their monetary policy stance is why you've seen such an acceleration in the value of its counterparties against it. So the euro yen has come, let's take May 2020, from 114 all the way to 164. So clearly there's an incredibly long move to the upside. We've gone up and up. Every single dip's been rejected, pushed back up to the upside. Now, what's happened lately? We look short. You can go and watch that on my last update, my profile. It's fallen massively, 164 all the way down to where we are, 155.75. Now, what's really ideal about this spot, not only do you have that very rash fall and a bit of impetus for you to get in on a lot of the time when you have those really quick rash moves harshly down or up, you'll get an impulse rejection sometimes. So you're seeing a little bit of that now. You've got a bit of price rejection. That's why you've got minor candle wick forming. You can also see you're coming into areas of rejection here. And there is price action to the left-hand side. So what I mean mostly is that as you've pulled into this area previously, you have rejected and pulled up to the upside. So therefore, it becomes ideal as a place to enter long. You've come under your 20 MA, you're heading to your 40. And if it does become the case that perhaps your 40 MA slowly creeps up, it wouldn't shock me at all, really. But anything dropping down into where you've seen all these previous candle wicks, to me, spells a good area for re-entry longs. It's very ideal for people who want to hedge the market and perhaps get long on a potential up move. If you had it short, though, I would definitely be out for gains. You should kill that. I mean, you've had 2 weeks straight down, okay, or we're on week 2, we're ending week 2, massive big red candle again. So the value of your short entries, like many other traders, is positive, and you've got gains there. You'll find people liquidate, and of course, what that does is push the market up, because if you're liquidating shorts, as you'll know, you're effectively getting long. I wouldn't really consider reshorting until you get anything meaningful to the upside. Really, that's going to come near 160.5 for me. In a risk-averse format, you've got areas of minor resistance and rejection to the upside. So that would be quite ideal, in my opinion, for a reshort if you do get to that point. And then, of course, you would look really to continue the trajectory to the downside. So it'd be something like this. Okay, it probably won't happen all at once, but if you do get around there, you would be looking to fall and continue, okay? Because often, as you know, if you look at other falls on yen pairs, like the dollar yen I was saying earlier on my stream, if you haven't watched that, you can watch it now. It's rarely the case that you fall through things like this. I mean, if you look at all this staircasing, you look at all this minor rejection, all these candle wicks, rarely, falling back into that will you just get a straight line like this, or at least to your 200 MA, okay? So your 200 MA, that rests about 154 on your daily. If you go into your weekly, you can see it moves way further back. I mean, the ultra risk averse zone, and this is if you really have a larger fall, and if you really, really are worried and you're an investor buying, I would probably hold off. That's your investor trend area. More or less 1465 is ideal. I wouldn't be shocked if you bounce at this point beforehand. You could have a light front runner, maybe a little skip in the market before you aim to get lower. But really, I would say on the much longer term, as a retracement from 2020, coming to that 38.2 area is probably going to be ideal to rebuy if you're a risk-averse trader. So that would involve more or less a long-term market, and you'd be looking at something. I mean, you could reshort it on the way down, but ultimately you'd be looking to rest around here with this key support. Okay, you can see it all there. I'm labeling it, and in line with these. With your key 200 MA. So entry 1 probably going to come there, and I would look to scale into the market further as the price falls, as I would with most other yen pairs. There's really good opportunity there to make a much better decision, I think, really, because when markets are falling fast, the best thing you can do is just spread out your entries. And I would probably say with yen pairs, it's best to be risk averse. So they can swing very harshly and for a long period of time. Drop your size, space things out, and most of the time you'll find that you get a little bit more accurate. So thanks for watching as always, guys. Hope that helps, and of course you can always get my free training underneath. I'll leave it under the video. Thanks for watching. See you in the next one.